Okay, everybody, it's about 20 minutes after 9 Eastern Time, and we're looking at the pound on an hourly bar here. I'm looking for a couple of trades, long at 2.0242, and I'm going to be using a 32 pip stop here, short below 2.0218, again with a 32 pip stop. On the long side, that will take this below these lows here. On the short side, it'll take it just a little bit underneath. We're in another position where the market is trading into this pennant pattern here, right into this support area. Now you can see I've got this line running across the lows here. Let me go ahead and zoom back out, go to a 4-hour bar. And what I've done is you can see I've got this horizontal line now running across. You had 3 highs over here when the market broke above them. It was a very, very fast move, and now you can see that we have a low here and then a low here. So we're developing some significant support. I think if the market can get another move down, it's going to break this level. If it does, we're going to be looking at the market, the pound at least, coming right back into this $2 level most likely. If at a very least coming right back into this region here, keying in on this high that will run through this area here. There are several bottoms coming in, retesting this area, as well as over here. So that would place the pound right into about the 2.0128 level. So either way, I think we can get a really fast move coming to the downside. Also, on a break to the upside, I'm looking at this market coming right back into these old highs at 320. That area is just above right in here. And you see that's about 290. And I think if the market breaks above this little pennant pattern which is forming here, we're going to see some momentum. And I really think we're going to get a relief after a couple of very big down sessions. I think you'll get a relief rally, so to speak, pushing back up into that area. So either way, really good risk reward on these two trades. In the longer scheme of things, though, we're coming into, I think, an area that will be key for momentum. You can look here. If we take this entire run from the low back in June, this high in mid-July, you can see that the market has broken through this 38.2% retracement a couple of times solidly to the downside, which I think leaves the market open to come down here to 2.0014. That's why I'm saying we're probably going to see the market coming back into this $2 level. If, of course, we start to get momentum coming in, of course, we can expect the market come right in here to this 78.6 level, which is 98.41. Even on a larger scale of things, I'm going to bring in, I know this is going to get messy, but just bear with me. I'll zoom back out. Now what I've done is placed a retracement on the longer run from here. This is coming in from March of this year back to the highs. You can see that the market is going to have to come down here to 2.0085. That'll be a 38.2 retracement on the larger move. Okay, so and this is something that was asked on the Q&A videos. What time frame do traders put Fibonacci's on? Well, you can see that it doesn't really matter what the time frame is, because what's important is the price action. Okay, so we've got a Fibonacci ratio on this big move here, Fibonacci ratio on this big move here, and we're looking for the overlap. You can see that the overlap is quite significant in this area. We've got horizontal support here, Fibonacci level here, Fibonacci level here. So it's about a 200 pip area, but nevertheless, this area here I think is going to provide some support for the market in the longer term, which means if the market can hold there, let me get some of that junk off of there. If the market can hold that area, then I really do think we're in store for the market to just continue this move, this action that it's been on really since 2006. And you can see that would be here and then coming down like this. We also had a question about harmonics. Now I'll give you one of the ways that I use that particular tool is I'll run this line down here. Okay, so actually I'll just go ahead and run it to the bottom. Okay, so you can see that the retracement here was 598 pips. Okay, so, and I just took one of the retracements in there. Now, what I'm going to do is lay that over here. Now, you can see that this actually went a little bit farther, and that's actually just about 1.272 extension. You can see here, that was very, very close. So, this retracement here is ultimately the same as this retracement there. Now, we'll move this up here. You can see this one fell short just a little bit. So this one, now, I use these harmonics in terms of planning. Okay, so let me go ahead and I'll run the Fibonacci retracement. Oops, wrong direction. Pardon me while I redraw here.